Do you want to find high growth stocks? Well, I know a metric that'll let you do exactly that. This is the performance of my full throttle investment strategy in just the first 3 weeks of the year. And so far, it's more than doubling the return of the S&P 500. And all the stocks in that strategy have something in common, which leads to these kind of massive gains. And in this video, I'm going to show you what it is, how to search for it for free, and examples of stocks meeting its criteria today. To explain what it is and why it's important, I've got this wooden track and this ping pong ball. Imagine this ball is a company, and this track represents its growth over time. The faster the ball moves along the track, the faster the company is growing. If we set the ball off on its journey, it'll start to pick up a little bit of speed, but it wouldn't take much to slow that ball down or to stop it altogether. Now this second ball represents a different company. It's the same size ball and it's going to go across the same length track. But if we change just one parameter and then set this ball on its way, we'll see that it just flies past the obstacle that crippled the first company. Well, the secret of the second company's success was its past momentum. The rapid growth it achieved in its past allowed it to continue that growth into the future. Now this might seem like a poor quality physics lesson, but I assure you this video is about investing. Because this concept of momentum is one that's been proven to be useful in investing over and over again. But many people still don't realize the importance of a company's past momentum or how to use it correctly to search for stocks. So let me show you step by step, starting with a real example. I performed my own research of the USA's top 100 stocks back in 2019, but one of the two main findings I found in particular was very important. Now the first of those findings was that if we filtered those stocks down to only ones that had experienced sales growth of 50% or more for the previous 5 years, then on average they went on to experience share price growth of 419% over the following 5 years. But that's far from the whole story, because the second and most important finding was that when I analysed the correlation between the previous 5-year sales growth and the following 5-year share price growth for all of those 100 stocks, I found there was a statistical positive relationship between the two. What that basically means is that on average, stocks that have experienced high past sales growth go on to experience high future share price growth. And stocks that have experienced low or negative sales growth go on to experience low or negative share price growth, which means a company's past growth makes an excellent indicator for its future share price growth, if you use it correctly. So before I show you exactly how to search for high growth stocks, it's important to note that this is not a foolproof way of finding winning stocks 100% of the time. But past data shows us that on average, high growth companies tend to outperform the market. So it's a really good metric to use. And there is a free way of searching for these high growth stocks, which I'll walk you through now, because there are a few important things you need to be aware of when you do this. Go to finviz.com. Now, first of all, for full disclosure, I am in no way affiliated with this website. It's just a really useful tool and it's mostly free. From the homepage, you should be able to see this screener tab. Click on it and this screener page lets you filter down stocks by a whole range of parameters. Now before we start looking at the growth metrics, first we'll want to filter down the companies, otherwise you'll just get way too many results. So set the country to USA and the market cap to plus large. That still brings back 677 stocks, which is a lot. So from here, I like to filter out certain sectors because there are some sectors that really need specialist knowledge to analyze. A good example of that would be the basic materials sector. Now a company in that sector might experience growth because of the discovery of a new mine. But to know the true impact of something like that, how long the resource would last and the impact on the business long term, you'd really need to be an expert in that sector. It's very specific. So for those kinds of reasons, I tend to ignore the following sectors: basic materials, financial services, energy, utilities, and real estate. Now to do that easily in Finviz, you actually need a paid account, but there is also a kind of free way to do it because you can see the sector each company is in the list of stocks below anyway. You just can't automatically remove a bunch of the sectors, but we know what they are, so we can just visually ignore stocks from those sectors. Now we want to start filtering those stocks by historical growth, but to do that on Finviz, you actually have to go somewhere that's a little bit unexpected. For some reason, Finviz put their 5-year growth figures on the valuation tab. They're not really valuation metrics in my opinion, but it doesn't matter, that's where they are. So just click on the valuation tab and you'll see the growth metrics on the right hand side here. And there's one metric in particular we care about most because it has the strongest correlation with future share price growth, and that's the 5-year sales growth. labelled here is sales past 5 year. And it's very important you understand exactly what these percentages actually mean. Finviz calculates the average growth per year over that 5-year period, i.e. the total growth divided by 5. That's the figure you'll see here. Now that's not always the case for growth metrics. On my website, the 5-year growth figure is the total percentage difference between the business 5 years ago and today. I prefer that because I think it's a truer reflection of the actual growth. Averages can hide all manner of sins. But again, it doesn't matter too much. Finviz's data is still really useful. It's just important that you know what you're looking at because there's a big difference between, say, a yearly average of 15% and a 15% as a total over a 5-year period. So to see the highest growth companies, simply click on the header twice and the list will be ordered by the highest sales growth companies at the top. I usually recommend looking at companies with a total 5-year sales growth of 50% or more, which on Finviz would equate to stocks above 10 to 11% per year. Now on Finviz, that's going to leave you with around 200 stocks to explore once you eliminate all of the sectors that we talked about earlier, which to be honest is still way too many stocks to pick from. So I'd recommend copying those stocks out to something like Excel or Google Sheets and then filtering them down further using metrics that indicate things like financial strength or valuation. I'll come back to that point at the end of the video though, because first I want to show you 5 very interesting stocks that all meet this high growth criteria today. I'll show you the metrics for each one very quickly on screen, so if you're interested in any one in particular, just pause the video. I'm going to order them with the last ones being the ones I think are the most interesting, but it might be different for you. So let's start with Workday, who provides software solutions for HR and workforce management with a 5-year sales growth of 155%. The second one is Netflix, who I'm sure we all know provide a media streaming service, but who are still experiencing strong growth at 92%. And now for the last 3, and I should say, I'm currently invested in all of these. Nvidia, who provide GPUs and software for gaming, cryptocurrency, and most importantly of all, AI training and modeling. They have a gigantic 5-year sales growth of 579%. Next is Meta, Mark Zuckerberg's social media empire, which I'm sure needs no introduction, and it has a growth of 132%. And lastly is Uber, which is my most recent investment and one I'm very excited about. This stock is up almost 15% since I first mentioned it on this channel around a month ago, and it has a massive sales growth of 357%. But picking stocks based on just their growth metrics is very risky. All those stocks I just showed have more than just high growth. So watch this video here for my full investment strategy guide. What I talk about in that video forms the basis of my lower and balanced risk investment strategies, both of which are already performing well above the S&P 500 this year. It'll give you some proven ideas of how to find great investments. Enjoy!